call. It was supposed to end at 2:45 Eastern Time, and it didn't. But it was a good one, so I got stuck on it. I apologize. But we are back here with you, 3 on 3. Let's jump right into it, shall we? So, for instance, disclaimer, this is for educational and informational purposes only. Bang. All right, let's see. Oh my gosh, some horrible numbers on the screen, folks. Just all the way across the board. You see the S&P 500 down by about 4%. You see just a ton from our side, from what we do over at Market Rebellion. There's some pretty strong selling in or put buying in a ton of ETFs. So that's something we don't see every day. We see sometimes, 2 or 3 ETFs in a given day that might have unusual option activity. We are seeing a ton of them today. So no big surprise that with Europe down basically 4%, Asia down, when you look at the Nikkei, down 4.5%. Not surprising to see us right now. Where are we down? 4.5%. Bang. So let's get into the rest of the presentation. Uber. People always love Uber, right? Uber Eats, they deliver food. But you know what? We did get a nice buy at Uber not too terribly long ago when we bought it for a bounce, and bounce it did. For instance, that move in Uber we saw was pretty darn strong on the bounce. But what I've got on your screen right here, folks, is not a strong move out of Uber. It is just the opposite. People are betting that even with the $3 sell-off today, that's right now carrying us below the 25.37 you see on your screen, that it might have to go down and retest. Maybe not all the way down to 14 bucks, folks, because I think, let me see, I think that bottom was right around 14.80, just below 15. Well, somebody's buying out of the money puts. You guys know the drill. When we see that, we buy puts. If they're bought in big blocks, I buy puts. If they're bought in big blocks, I buy calls. These are puts. Somebody bought 6,000 of these little devils for the 22.50 strike. So again, the information that is embedded in this trade. Number one, April time frame. So that is 2 weeks from Friday. That's April expiration. 2, 22.50 strike. So basically 10% drop carries us down to 22.50. And obviously somebody buying a lot of puts at this strike is looking at the chart and saying, maybe this thing does go back. Because when we fell, folks, by the way, when Uber, the 4th of March, Uber was 35 bucks. It made a ratcheting downward move to 28, another move to 22, and then fell all the way beneath 15. So taking a look at that, that's the chart. I mean, that V at the bottom was about 1480. And now, as you see, it's breaking down. It's down almost 11% today, and they're buying those 22.50 puts, which means that that is a bearish signal right here going on in Uber. Ouch. All right, second trade, XLP. So this one, folks, is consumer staples. Somebody stepped in with the XLP ETF trading at 53.72. Just putting it up on my other screen since my computer gave me a big ding. That means that that I bought or sold something. So let's see. Yep, it is still filling on some of my XLP put spreads. So XLP with the index at 53.72, somebody steps in, bang, buys 10,000 of the April 52 puts for $1.42. Open interest was only 200 contracts. So this is an opening trade. They bought them on the offer, which is what we're looking for. They also traded out of, I'm sorry, they also sold April 47 puts against it, collecting give or take 50 cents. So you own the 52 puts, that's the right to sell at 52. You've given somebody else the right to put stock to you at 47. So that's a $5 put spread, the differential between these two strikes, 52 and 47. So they have paid roughly $1 for that, $1 for something that can go to $5. That would be a huge windfall for them if indeed it did. And it would need to fall to 47 and lower for that to hit its maximum price point of $5. But this is a smart trader, I believe, because when they're trading like this and they're trading a spread, they are mitigating to the best of their abilities time decay, which is theta, as well as market direction. Because obviously, when you buy a put, you're betting on the downside. When you buy a call, you're betting on the upside. And if you're buying this put and you're wrong, you lose $1.50 if you just buy it naked. The trader in this case said, you know what? Buying them for $1.50, sell the others for 50 cents. I've got $1 in the trade. Again, you guys know the drill. A dollar means $100 because every option's for 100 shares. So you move that decimal over. And then 10,000 of these, that's 1,000,000 share equivalent. So somebody basically says, you know what? I'm putting $1,000,000 on the table. Bang, that the XLP goes lower. Some of you are going to say, hey, consumer staples, XLP, what's in it? That's what's in it. Procter & Gamble, Coca-Cola, Pepsi, Walmart, Mondelez, Philip Morris, Costco, Altria, Colgate-Palmolive, Kimberly-Clark. They're what is make up almost 3/4 of the XLP. Let's take a look at the chart. All right, so at the lows, that low was hit on the 23rd of March, by the way, and that low was 48.63 that you see right there on March 23rd. So somebody is putting on a bet that maybe this consumer staples group goes back down there and tests somewhere near that level. If it did, they'd make $4 on a $1 bet or $400 on a $100 bet per option. They've got 10,000 options. So this could be a $4 million winner on a $1 million investment. You guys get how that works? Let's move on to the next one. All right, X, which is U.S. Steel. U.S. Steel, activity in this name has been bullish since the 20th of March. And since the 20th of March, after it bottomed, let's see, the U.S. Steel bottom was right around $4.85. So on the 20th, they stepped up, bought the 27th of March expiration 550 calls. So just out of the money at that time. Then the next one that's in the middle of that part of the screen, on the 31st, yesterday, they, with the index trading 637, a full $1 higher than when they did that other trade, they stepped up and bought the 6,400 of this Friday expiration 650 calls. And they bought those from 4 cents all the way up to 24 cents. And they bought about 6,400 of those. Then we get to today's trade, which I'll show you. I just wanted to show you that we have had, when I said earlier today that we had repeated buying in letter X, I meant it. This is repeated buying, and these guys have been right, and that's why we've been tagging right along with them. So I blew up today's purchase just so you could see it big. There it is. They bought 5,200 of the 9th of April. So that isn't this Friday. That's the following Thursday. How do I know it's Thursday? Well, because Friday's Good Friday. And even in this crazy market, we're going to be closed on Good Friday. We're not going to be trading. So as it leads into Passover and Easter, they bought these April 9th expiration 650 calls because, again, This is one of the few times, folks, that we're going to see an expiration that is not the first, second, or third Friday of the month, because it can't fall on the 10th, which would be the third Friday of the month because of, again, it's Good Friday. So for that reason, they bought these calls today, the April 650 calls, same calls as you see that they bought with this week expiration, which was the 650 calls for this week. So they've already made a profit on the trade. They move on to this one, push it a week out into the future. Again, what's the information that's embedded in this trade? Next week, not this week, next week is the expiration. 650 call is the strike, which is in the money by some, 13 cents, as you see here, because it was trading 663. So it's somebody that rather than an upside call, bought an in the money call. That's bullish, but it's not the same amount of bullishness as we usually when we see that upside call, which would be a more levered bet even than this, which will move about 50 cents for every dollar the underlying moves. So there's the graph, as you see, and as I said, the bottom was beneath $5. That was, what date was that, did I say? The 18th of March. And it has been steadily moving up with some minor pullbacks. Keep an eye on this one, folks. I'm in it, and it's been a good ride so far, but as always, I have discipline on my exit as well as on my entry. So right now I'm looking at that I would be willing to cut losses for these calls, which we paid, I think I paid 55 cents for them. But if I start seeing these erode down to like 30 cents, 25, 30, I'll probably get out. As far as taking profits, if they double, if it goes to $1 or higher, I'll take at least half of them off because that's my profit discipline. All right. I believe that is it for the day. Wait, there is, that other thing, I'm sorry. This was a 1 month graph. This is today's graph of the move. And as you see, it did already carry it over 7 like a bang, like a shot in the first hour or so of trading, which was a gift from the trading gods. I am John Najarian. I hope you have a great day wherever you are. Be safe, flatten that curve, stay inside, and or just if you go outside, don't go out in a group. And we'll get through this. There's still plenty of ways to make money, and I've showed you 3 ways that people are betting on making money in the short term. I'll be back with you tomorrow. I hope you have a great night.
That's right.